The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome to an update on the recent historical Brexit vote for Britain to leave the EU. I want to thank you, everybody, for joining us today. A few housekeeping notes before we dive right into the presentation. Attending today with me is Amanda Murray, a colleague of mine here at Stonehearth Capital, and she will be moderating the question and answer period, which will happen after we go through the presentation. It's a very short presentation, so this is really designed for you to ask any questions and get answers to anything you may be thinking about in terms of portfolio, the Brexit, how this impacts the world in general. Do a housekeeping note that we cannot answer any personal questions on a webinar. So anything having to do with your own holdings, your personal portfolio, please give the office a call, 978-624-3000, and we'll be happy to discuss your personal situation. To ask any questions, you can type it in on the chat box. It should be on the lower right of your panel. You can type them in whenever you want. Amanda will be monitoring them, and then we'll get to those at the end. So where do we stand? So what we're looking at here is the actual outcome of the vote for the United Kingdom to leave the EU. As you can see from the red and blue here, it was very split vote, with Leave eking out a victory at the end. It went against almost every poll that we read and seen before the vote, which explains a lot of the market movement you saw on Friday and yesterday in terms of investors were positioned for a Remain vote, and when the outcome didn't go as expected, they rushed to change their bets. So I think there's a lot of knee-jerk reaction, and I really feel it was a temporary dislocation, and we'll go through this in a little bit greater detail a little bit on, that this is probably more of an opportunity for portfolios than a crisis. The first thing that kind of really stands out when you look at these votes and how people vote, if you look on the right, you can see Great Britain, Scotland, and Wales. You can see that it was really concentrated in England, the vote to leave. So Scotland is part of the UK, it's not part of England, but it is a Commonwealth, so it did vote to stay. The City of London, which is that dark blue on the lower right, voted to stay. The rest really voted to leave. So it really was split, and it was geographical, and I do believe that this is a greater symptom of what's going on in the world today. We've seen the have and have-nots. I think it's an understanding of people that the system has not worked for them, for a lot of people, for the past 10, 15 years, and they just want something different. They want something to change. The rising tide has not lifted all boats, and they just voted for something different. We'll have to see the outcome of this. So the next slide I really want to go through is what did they actually vote for? So I know there's a lot of confusion on what they actually voted for, and I hear all kinds of different stories. This is a very complicated chart, but it's really very simple when you boil it down to the details. What we really want to look at is find the UK on here, which is right here. So what is it actually a part of? It is part of the EU. It is not part of the Eurozone, which is a common currency. It is not Greece. It is not Italy. Great Britain has their own currency. It's Great British Pound, which has been very weak during this. But they don't have to create a new currency. They don't have to go out and redo a lot of their economic pacts, except with the Eurozone. So they are part of this EU. They are not part of the Schengen area. And the Schengen area is immigration, which is interesting because a lot of the vote happened based on immigration. And they are not part of the free-flowing borders. Now, they do have open borders with the EU in terms of if you're a guest worker, you can go over from France, go work in England without having the paperwork and everything, and you get treated just like a citizen. That will change. The other interesting part to notice this is there are countries that trade very freely with the EU, Norway, Iceland, Switzerland, that are not part of this. So there is precedent. It's not like there isn't a precedent out there that you can be out of the EU and still have trade, have economic ties. So this is what we're looking at. They leave the EU, what they want to be, and that is still left to be decided. They're not really sure. And I think the biggest thing we can draw from this is that there is a future ahead. They will still trade. Trade doesn't stop. People don't stop manufacturing. We still will have free trade. So we'll see what is the fallout of this Brexit vote. What actually comes of this? So the first thing is UK is not out yet. And we'll see Blue and we'll talk about that. They are still part of the EU. Trade is still going on. Nothing changes as of today. And there will be some time before anything changes. We saw a large risk market sell-off. We saw a lot of risky assets, small cap US, great British companies, European countries all sell off over the past 2 days. They're having a little bit of a reflexive rebound today. I don't think that carries through. This is more of just overshooting on the downside. Now they're making it up, but we'll see how it goes. We're also seeing a stronger US dollar as we do during crises. People float to the safe haven currencies. Weaker GBP, which is a great British pound, 100% to be expected. If the UK economic falls, people leaving money out of the British pound, the currency goes down. We did see our managed futures providing downside protection, and fixed income was also helping. AQ Mix, it's a managed futures product we hold. It really shows its true colors during crises, and this was no different. It was actually up 5% on Friday. It was up 1% yesterday, again, providing some of that downside protection. As hopefully a lot of you heard, UK Prime Minister David Cameron resigned, not immediately, but his intent to resign. So what happens? The UK needs to elect a new government. They initially said they would do that by October. I saw recent headlines that it's going to be moved to September, move some of the uncertainty. And this is where I was talking about where they're out but not yet out. They really have to invoke what you're going to hear, this Article 50 to leave the EU. And what does that mean? The referendum is non-binding. The House of Commons still has to vote for it, which is pretty much a formality no matter what you read in the paper. I don't think they're going to go against the will of the people. They will vote for it. Then they have to notify the EU of their intent to leave, which means they invoke Article 50. That is when the 2-year time clock starts. The 2-year time clock does not start today. It's when they do this. And it's interesting, you see the countries going back and forth with their own competing interests. You have Britain saying, let's take our time, we're going to vote this maybe later, let's elect a new government first. You have Germany on the other hand saying, no, you voted to leave, we don't want you in, you want to get out, you should leave now. And I think you're going to hear a lot about this, and that's why you have this noise. You're going to hear a lot about this. It is a messy divorce, and you're going to see fights on both sides. And there's something out there called game theory. I won't go into details, but it's how countries deal with each other and how mathematical problems are solved. And basically what you're going to see is game theory played out in the real world. You have the EU that have to make an example of Great Britain. They don't want their other countries thinking they can leave too. So they're going to really have to be nasty with Great Britain. They're not going to let them prosper. So they're really going to hold their feet to the fire. You're going to see a good cop, bad cop out there. I think Germany plays the good cop, so Angela Merkel, who's the head of Germany, will be nice to Great Britain, soothing out hard feelings, and I think France will play the bad cop, saying, you know, England's got to get out, we're going to redo all these trade deals. I do think this puts the Fed on hold for the next rate rise, and probably for the end of the year. You've already seen some central bankers come out and start talking about cooperation and what this does to the economy as a whole. So the fallout from our standpoint is really that it's temporary dislocation. You see the expected reactions to risk assets, the currencies expected. Our hedging products, AQ Mix Managed Futures, worked as well. Everything seems to be going orderly. So that is a positive from this, in that there was no major market disruptions. Everything seems to be happening in an orderly nature. And other than the noise you're going to hear, this will happen in an orderly manner. So going into this, how were we positioned? And I think it's good to see what our country exposures are given this. We did not get out of the way of this, but we did not stand full force into this. And what we're looking at here is typical model portfolios. Everybody's individual portfolio may differ a little bit depending on cash flows and what you hold, but in general you can judge that this is what your portfolio has. So the U.S. North America region, which includes Canada, is what your portfolio is exposed to. For our conservative clients, typically they have almost 90% in the U.S. North America continent. That includes our fixed income exposure. It does include managed futures, which can hold foreign currencies, but in general they tend to be net neutral in terms of the country exposure. Moderate a little bit less, and aggressive a little bit less than that. Again, we do think international stocks are riskier than the U.S., which is why aggressive clients hold a little bit more than our conservative clients, but they do offer value. Asia is another big piece of your portfolio. So again, 4% for conservative, 10% for moderate, a little bit more for aggressive. You can see that a full, huge 80 to 90% of people's portfolios have no direct impact to Europe or the United Kingdom. That's not saying we don't have exposure. We do. In Europe, 4%, 6, and 9. And the real impact of this vote, United Kingdom, is very small. I do think the UK may go into a recession, but again, given our exposure, very small, 2%, 3%, 4%, we don't see us changing our exposure to that. We feel that this is the proper exposure to have, that nothing changes. We do think Europe could benefit from this. Again, with the recent sell-off, it may provide some opportunities in what we're looking at. So what do we do to change our portfolio here? In the short term, nothing. We really thought Britain would remain. They didn't, but our portfolios were properly hedged, properly constructed, that we don't see us making any major changes based solely on this outcome. What we do see is opportunity. We saw some dislocation in assets that got hit unfairly due to this Brexit. In particular, I'm looking at small caps in the U.S. They're very domestically focused. They were down in line with the international brethren, down 3, 4, 5, 6% on Friday. We think they got hit unnecessarily. We think that provides some opportunity. And going into this, we had some excess cash on hand where we can deploy that. So this is kind of what we're talking about with this dynamic asset allocation that we're running, is that we have the opportunity to take advantage of situations as they present themselves, and this could be a good buying opportunity. This doesn't mean we're going to be buying anything tomorrow or the next day. I think we need to let this settle out, but it's kind of things we're thinking about in terms of where we find opportunity, and we'll keep you updated as that happens. The last slide before I get to your questions is really about more for your information than anything. This slide came out from Bloomberg. It came out before the vote. But I was really giving you a sense of the worst case scenarios in terms of what could happen once this vote happens. So the main one, you look at Scotland, they could try to break away from the UK again. We'll see. We've heard both sides come out and say that it's definitely going to happen. I don't think it will, but it may. UK, again, we've talked about that. They have a full 2 years once they invoke Article 50 to start negotiating this. Ireland, I think, is the one that gets really affected the most in this. People tend to forget Northern Ireland is part of the UK. On a personal note, I have relatives over in Ireland. I know it's tough with a name like Gauthier, but I am Irish. They live just across the border from the Republic in County Tyrone, and it's interesting. So I was talking to them the other day, and I was like, what's the impact of this? It's not really a big impact for you, right? And I said, well, it's huge impact. The borders go up again. There's no free movement between Northern Ireland and Ireland. They have a farm. They sell eggs. It used to be they jump in the truck, go across the border, sell some eggs in the Republic, and come back. That's going to change once all this happens. There'll be border controls, passports, tariffs. So we still have to wait for this total impact to play out. France, they're going to try to push together more euro. They want to guard against their National Front Party, which is Le Pen. You probably heard her name here and there, and they're voting to get out of the euro. Same thing with Germany. They have some far-right parties. Spain had an election on Sunday. There was some fear that their Papademos party, which is, again, the anti-Eurosceptic party, would do well. It didn't. So that's kind of a bright sign. So again, there's going to be fallout. There'll be lots of noise focused around these countries. But in the end, I think what it comes down to most is looking at the most likely path of what's going to happen. And what's going to happen is going to be a messy divorce. You'll hear lots of noise on both sides. In the end, England will leave the EU. They'll negotiate their trade treaties. They'll negotiate how financial firms work, and business will go on. They'll still produce goods. They'll still ship them to the EU. We really view this as temporary dislocation, and it's not enough dislocation to really push the world into a recession, which is what we're really watching out for in terms of what the bad outcome is. We don't see another 2008. We don't see another 2000. It's a temporary dislocation, presenting some opportunities for us to take advantage of those dislocations. So I hope that kind of gives you a quick overview of what happened, where we're going, how we see this. Now I'd like to open it up for questions, because this really is meant for you to
Unmuted.
opinions, get to know what we're thinking. So I'm going to turn it over to Amanda, and if she has any questions, she can start the question period.
Hi, Chris. Currently, we don't have any questions in the question box or the chat box. I don't know if you want to give our clients a couple minutes.
Sure, we'll give them a couple minutes. I guess I just do my job so well that no one has any questions. So while we're thinking about questions, if we have any, the one thing we always think of is, you know, how do we deal with this in portfolios? And how do we deal with this in clients? We spend a lot of time with our clients, you know, to really understand your risk tolerance, and then we position your portfolio accordingly to that, accordingly to your risk profile. And we don't think this has changed anything. We don't want to be reactionary, just reacting on emotion. We really take a lot of time to understand your positioning, your risk tolerance, and how your portfolio should be positioned. And again, very transitional. We think this is very temporary and that we will have some opportunities to purchase.
Chris, it doesn't look like we have any questions at this time. So if anybody does feel that they have questions or would like to discuss it more with Chris after the webinar, please feel free to give the office a call. It's 978-624-3000. And oh, actually we do have one.
Couldn't let me go. Someone had to jump in there. Huh?
So this comes from one of our clients, and he says, I'm rooting for everyone else to be reactionary to continue to drive the market down, so we have an even better buy opportunity.
Go ahead.
And another one, how quickly will you make changes if a second event should occur, like a bombing, etc.?
So two parts there. So the first question probably came from someone who's about 25 years old, who has a long time frame and can let the markets come back. We never like to see the markets go down. But again, being positioned going into this, I think you are right that it does present a buying opportunity. How low does it go? I don't know. I think the markets have to kind of come to that conclusion and search out a bottom. There's never an all-clear sign. There's never 100% guarantee that this is the bottom or it's going to go down another leg. We do think there will be lots of volatility around, so that this opportunity hasn't abated. There will be opportunity going forward. We'll be on the lookout to take advantage of that. But I do think you will see, which we've been calling for a while, is this increased volatility, and this just exaggerates that to have more volatility. The other question was about how quickly do we adjust portfolios for a bombing. Those are what we call black swan events. Black swan events are, again, people go back in time, and a famous author wrote the book, The Black Swan, and basically the world thought there was no black swans until someone actually found one. So it's those unknown unknowns out there, and you really can't react to those before they happen. By definition, a black swan or a bombing event is something that you don't know in advance. So there's no way to defend against that other than having proper diversification, having downside protection built into the portfolio. So we tend not to react to those black swan events right away. That being said, we let the data tell us where we want to go with this. So we have our risk models. We have NDR that we rely on to really sort through all the noise and get to the data and what is the true economic impact and what the impact would be to the portfolio, and we'd make an adjustment. So there is no set time frame. It depends how the data reacts. I think right now we need to let the dust settle a little bit in terms of the Brexit vote and see where the opportunities lie going forward.
Chris, we have another question. It says, are the major currencies becoming profitable to speculate on their eventual declines?
I think you missed your boat. It would have been great to be short the British pound going into this. I think there was a few out there. I heard George Soros, a famous investor, was short, but then I heard he was long, so you never know. I think people talk their own book. I think you had to be hedged going into this, which we were. We have an international product that has a currency hedge component into it, which profits when the US dollar strengthens. So I think that was the way to play it. I typically tend not to play currencies. The data shows that people really can't predict currency movements from year to year, that they're more random than anything else. But again, when these events happen, potential events, you can use products to kind of hedge your downside, which we have. So I don't think there's a way to play currencies right now. I wouldn't be going in buying the British pound to go long. I also wouldn't be shorting it. the time to show up was before the event happens, as it always is. Hindsight's great in 2020. It's always amazing how smart people are once the event happens. Are there any other questions?
Nope, looks like that's it, but I would like to mention we do have a couple of clients who are only listening via telephone, so if you are on the telephone and do have questions for Chris, please do not hesitate to reach out to Chris or someone here in the office. We're always happy to help you, and other than that, that's it.
So thank you, Amanda. I just want to close and note that thank you all for attending this. I appreciate it a lot. And we are here for you. So if you have any other questions, need anything at all, please do not hesitate to call the office at any time. Thanks, and have a great day and night for our English friends.